Well, hey there, everyone. Welcome to Chart This with Dave Keller. Happy Tuesday, June 3rd, 2025. My name is Dave Keller, and pleasure to be bringing you this live market recap every trading day after the close. It's a beautifully sunny day here in Redmond, Washington. True story, we had two hens that made it into our fenced-in backyard. We've got a big property. We don't have neighbors that are very close, so we got a lot of space out here. I don't know whose hens these are. So if you hear anything on social media about missing hens in Redmond, Washington, would you let me know? Because we have two of them in our backyard. I'm not sure what to do in this situation. It's first time for us after almost 6 years of living out here in the countryside. So, hey, first time for everything. With that in mind, let's talk about the market conditions here today. Decent update, right? And most of the gains of the day happened in the morning through about 1:30 p.m. Eastern time. The S&P accelerating to the upside. In the end, sort of chopping around into the close, but the S&P looked like on a trajectory to almost push above 6,000 today. Ended up closing around 5970, which is still a decent update, up about 0.6%. Technology at the top of the leaderboard, but followed closely by energy, and energy is a space to certainly watch. I was on the Forex Analytics Face interview this morning with Dale Pinkert, which I do about once a quarter with those guys. Dale's fantastic. It's great to just chat about the markets for a half hour, and we talked in particular about crude oil prices, the technical outlook for crude oil. We'll look at the USO as an ETF to consider that particular area of the market. With that in mind, let's look at some charts here. We're going to go to the market recap. We will talk about sectors. We'll talk about key stocks. We'll look at the market carpet, which is a heat map style visualization. We'll look at some charts together, and then I will take questions. And I appreciate questions as they come in all during the live stream. Just pop them in wherever you're watching it on Facebook, LinkedIn, YouTube, or X. I can see those questions here from the live stream, and we'll take a couple before we wrap. We're planning an all mailbag episode on Friday of this week, so any of the questions we don't get to, we'll definitely put them there and hand select some of those to hit over the weekend. Tony, I appreciate so much that very kind gesture, the super chat on YouTube. I appreciate you pitching in to feed the hens, which have wandered onto our property. That's good to know. I don't know exactly what they eat. We do have a feed store here in the local downtown. Maybe I'll swing down there, see what I can do. Appreciate that. All right, let's keep going here. Looking at the major averages today, as I mentioned, nice update. It really was the first half of the day that those gains were sort of made. In the afternoon, kind of choppy sideways, but it was enough for the S&P to finish above 5970. So, very closely evolving from a short-term consolidation, almost a pennant kind of pattern on the chart of the S&P 500 and the NASDAQ. Days like this make it look like we're going to resolve that to the upside and very quickly point toward previous all-time highs. And again, you can go blue in the face talking about why that shouldn't happen, why that couldn't happen, why it's probably not going to happen. But if it happens, it happens. That's one thing I've learned over many years of analyzing the markets. The market does not care what you think is going to come next, which is why I've learned to not traffic in my own opinions, traffic on the facts of the markets, traffic on price action, follow the trends. If the trend is going up, doesn't matter if you think that's okay or not, it is. And you need to make sure that you are positioned as such as much as possible. So we'll look at the chart of the S&P in a little more detail, but it was 0.6% higher today. The NASDAQ composite up 0.8%, mid caps and small caps actually having a pretty good day. I'll say that again, because we haven't said that in a while now. The small cap S&P 600 had a pretty decent day, up 1.6%. Doubling the daily percentage return of the NASDAQ composite. So small caps, apparently the juice today, that's been a rarity here. So, again, talk about things that look different. Anytime you have a market sort of in a stable kind of equilibrium, looks like buyers and sellers are in agreement, you're always looking for that catalyst, right? What's that new piece of information that will cause things to start to evolve? Haven't had a period where small caps have been outperforming in a long time. This is one day, so let's not get too excited, but certainly something to note as you're evaluating the evidence. The VIX drifting lower today, about 2/3 of a VIX point. We're down below 18 now, so we're clearly below 20. We're in a low volatility environment, according to how I usually use the indicator. When the MOVE index is coming down, as it is when the VIX is coming down, that basically just means the volatility for the bond markets, and in this case for the equity markets, as priced in by the options markets, basically saying you low volatility, low fear conditions are pretty constructive. Those are the conditions that are usually present when the market is in a stable bullish phase. Looking at the interest rate environment, you can see the 10-year point basically finished exactly where we were. Now, bonds opened stronger today and then sold off. So you can see, the opposite is where rates opened lower, but then closed back to the previous highs. So we've talked about the trend line off of the lows on the 10-year yield, which is $TNX here on stock charts. Off of that April market low, we've seen rates kind of generally trending higher. We're now retesting that trend line support. So today it kind of came down out of the open, but by the close, sort of back to the upside. Higher rates can mean a lot of different things. I actually had a podcast interview earlier today. It's not ready yet for you, but probably have it out tomorrow morning with Jessica Inskip. Jessica is the Director of Investment Research at stockbrokers.com. I've known Jessica for a couple years and I've followed her work. She's been in a couple different firms and earlier in her career at Fidelity and at Merrill working with retail traders. And so she does a really good job of explaining kind of complex financial stuff into simple to understand, very straightforward kind of digestible pieces, which I think is really helpful. And I had a great discussion with her about the interest rate environment, what to look for. So I'll save the great insights for that interview with Jessica. Should be out tomorrow morning for you. By the way, if you missed it, the previous interview we did was with Tom Boley. It was really, really good. Tom's awesome. We always have a great time chatting about markets and life and technical analysis. And he had some really interesting insights about looking at the consumer space using a couple different proprietary indicators. All right, back to the markets here. We can see this. So the 10-year basically flat. Bond prices, not much of a difference. Ended up, closing a little bit lower, as I mentioned. Opened a lot higher, but then closed back below Monday's close. The dollar was actually up about 0.2%. That's a bit of a different look. We've seen the dollar index, sort of rotating lower and looking like it might be breaking down here. And generally been in a downtrend here in 2025 for sure. Today, kind of bouncing higher. So stronger stocks, stronger dollar today. The DBC, which is a commodity ETF, up about 0.2%. Most of the energy space was up, except for the precious metals trade. Gold down 0.9%, silver down 0.5%. These are all using the commodity ETFs that you see listed on your screen. Copper was flat. Crude oil and natural gas higher. Energy stocks, depending on what area of the energy sector you're looking at, as we've mentioned a number of times here recently, there's sort of areas of that sector that have looked pretty good, and it's infrastructure, natural gas, pipeline kind of companies. The ones that have looked less good are things like the XOP kind of oil producers, integrated oils, and those are actually starting to bounce a bit because crude oil prices are bouncing off of a double bottom pattern. So interesting yet again, energy in the top three today. Cryptocurrencies, kind of a choppy session overall, I would say. Currently right about where we were yesterday at this time, around 106,000. So we've been sort of in that 104 to 107,000 range here over the last couple of days coming out of the weekend. Mixed results for some of the top coins here. I'd say Bitcoin and Ethereum kind of stalled out after Bitcoin testing and slightly achieving new all-time highs, breaking above the highs from earlier this year, kind of stalled out, attempting to get back above there. And out of everything we just rattled off, I do own the GLD, Bitcoin, and Ethereum. That's about it. I own S&P funds, but not the SPY, but that's neither here nor there. All right, let's look at the 11 S&P sectors. We can see 8 up, 3 down. So overall, sector breadth kind of positive today. Technology having a strong day. Semiconductors, really an area of the market showing renewed strength. We've talked about NVIDIA, breaking out of this congestion zone. We've talked about Broadcom continuing in a pretty decent uptrend. Today, you're seeing some of the other semiconductors pop up, and I grabbed a couple of those charts to show you some of those really breaking above almost a head and shoulders bottom type of pattern on some of the semiconductors that have been lagging and looking very unlike charts like NVIDIA, which have sort of been the positive outliers. Some of the other semiconductor names starting to improve here. Energy, number 2, up 1.2%. Materials, number 3, up 1% today. On the downside, only 3 sectors down. You have real estate, the XLRE down 1/3%. Communication services down 0.3%. Consumer staples slightly lower, 0.1% from yesterday. So, I mean, decent day in terms of more sectors up than down. Is there like a theme with some of these? I mean, you've got probably the growthiest of the growth at the top of the list. Then you got the MEI trade, which are the sort of cyclical sectors: industrials, materials, and energy. By the way, I did see a question and I meant to answer it and I didn't. This is what happens to my brain as I'm trying to multitask, do the show. Someone asked about why those some of those sectors are called cyclical sectors. And as a quick answer, I probably could talk about this a little more detail on Friday's mailbag episode. But some of those value-oriented sectors, call them cyclical because they tend to have a cycle, right? A natural cyclical pattern. They tend to be a little more sensitive to economic changes, right? So when the economy is strong, things like industrials, raw materials tend to improve. As certainly as prices are going higher, that tends to be pretty good. And so compare that to something like consumer staples, which is not a very cyclical sector, right? It's a little more stable because it's less sensitive to economic changes because we always need toilet paper and cleaning products and alcohol and tobacco. There's not a lot of fluctuation in those based on, economic changes. It's more just things people need. So that's why you kind of call those cyclical sectors is the way I would summarize it. All right, looking at the advanced decline data, let's see, we've got more up than down, right? And this visualization has kind of gotten better over time. I'm thrilled that the sort of breadth snapshot is here on the market dashboard on stock charts, and this color coding I think is pretty well done. Which with whatever you're looking at, if it's green, it's pretty bullish for the markets. If it's dark red, it's pretty bearish for the markets. And if it's neutral in the middle. So the fact that all of this is colored green basically means a lot more stocks that were up than down across the board. The strongest breadth is in the small cap space. Now, as we've covered, I think pretty closely, really in the first quarter as the markets peaked out and then rolled over. And even in the second quarter, as the markets have bounced off of that low the first week or two in April, the breadth has been much stronger in the large cap space than the small cap space. The performance has been much stronger in the large cap space versus the small cap space. Very few days, I can count on one hand probably days since the April market low that small caps have outperformed and have shown stronger breadth than the large cap indexes. It just hasn't been the theme here. It hasn't been the general structure. But that's what I'm seeing today, right? Small caps, you have 84% of the S&P 600 small cap index up today. 81% of the mid cap index. Compare that to 69% of the overall equity markets in terms of the New York Stock Exchange. So pretty good. We'll see if that actually continues and if there's more of a upside to be had there. But we've talked often about the chronic underperformance of small caps. I think it's a little too early to declare that done by any stretch. But worth noting, days like this definitely stand out because that's different. That's different than what we've been observing here. All right, let's look at the mega cap leadership names in the growth sectors. Broadcom up 3.3%. That is a strong upside follow through, continuing that uptrend phase of higher highs and higher lows. NVIDIA up almost 3% today, and that's obviously the biggest weight in the XLK, one of the biggest weights in the S&P 500, the NASDAQ 100. Strong up day in a big name. Apple up as well, up 0.8%. On the downside, a couple of these names were lower. Alphabet is starting to look less and less like some of these other charts, kind of languishing, struggling to get above the 200-day moving average and hold it. You've got some bearish candle patterns like the shooting star candle. Actually, I think I grabbed that chart to look at that here later. Meta down 0.6%. That's arguably been one of the best of these stocks along with Netflix. So today was really more about some of the big technology areas of the Magnificent Seven really accelerating to the upside. Again, a lot of semiconductors aren't reflected here, but really were some of the strongest performers today. All right, shall we go to the heat map and see how things played out? And when I was looking at the heat map earlier, just preparing for the show here, I was immediately drawn to the underwhelming look in communication services, right? Alphabet down, Meta not up, kind of slightly down, Netflix basically flat. So the three biggest weights that make up probably over half of the XLC all down today. And so that shows you how much that sector is starting to lag behind others. And so that's something certainly to follow. Alphabet's not been a great chart compared to the other, certainly some of the other Magnificent Seven names like Meta or Nvidia, but really looked like it was going to be pushing above the 200-day moving average. Now it's kind of stalled out and drifting back below there. So that was one thing that immediately jumped out. Another thing, obviously, the pretty consistent, strong performance within the technology sector. You have charts like Uber, which have, obviously been pretty rough charts here recently, pulling back after making a new 52-week high in the last week or two. But other than that, I mean, most of these stocks were actually showing a pretty big upswing. Also, a nice upswing in solar stocks. Now, these charts are not great charts, which is why I'm not going to take a ton of time to highlight their up day. So Enphase was up 6% today. That's great. But we've been in a consistent downtrend for the most of the last 12 months. So I'm going to save my energy for charts that are in more constructive rotations. But I'm certainly noting some of these names starting to break higher. And I would say Micron is an interesting example to look at because, the story with charts like Micron was an inability to get above the 200-day moving average. You can see all these times where we stalled out to push above, and then obviously we had the big sell-off into the April low. We regained that breakdown level, gapped higher to the 200-day, and then today it certainly looks like we're starting to push above there. And this is one of those semiconductor names that I was mentioning. So I think the bull case from here, charts like Micron do what we're seeing today, right? They've consolidated, which tells you we're in an equilibrium after this big run off of the April lows. This sort of pattern tells you buyers and sellers are kind of in agreement, right? We're sort of right around, we're saying that Micron's worth around $95, $96 a share. And we're all kind of agreeing on that, just sort of trading around that level. But all of a sudden today starting to look something different and breaking to the upside. So indicates potentially a nice breakout move above that consolidation. What we probably call like a flag pattern. It's not a perfect example of that, but definitely a consolidation and breaking to a new swing high, sort of respecting the 200-day moving average is a good thing. So the more big mega cap technology names that look like Micron, I think that's what allows the market to go meaningfully further beyond what we've seen so far. In the financial sector, I almost grabbed the chart of CME. I didn't. It was one of the worst performers in the S&P 500 today. Arguably still maybe the best chart in the S&P, or certainly in the top 10 of those 500-ish stocks, making higher highs and higher lows, pulling back a little bit. Arguably this is the type of chart you look for a pullback to the 50-day because that's what's been pretty consistent. FactSet, also one of the worst performers. They've just announced a CEO change this week. So it's down another 5%, peaked around 470, and then it's rolled over now just below 440 today. So leadership change. That was a longtime CEO. He was there about 30 years from what I remember. And it's so funny. FactSet, what I often would joke with portfolio managers at Fidelity, as much as they would try to cast a wide net and try to pay attention to ideas in any sector, they would usually focus in on whatever they started with. So an analyst that had covered semiconductors would always have a semiconductor position and always have an opinion on that group because they just couldn't help following it. And I started my career at Bloomberg. So I followed Reuters, Thomson Reuters, FactSet, sort of these market data companies because they were our competitors at the time. And FDS is probably not the most important member of the S&P, but I still watch it pretty closely because of that. I guess old habits die hard, as they say. Final thought would be in defensive sectors. One of the things we're looking at when you've had an environment that's been so strong, and then over the last couple of weeks, kind of mid-May to early June, the things have changed, right? Short-term breadth has gotten less positive, a little more negative. Markets have stalled out kind of sideways, looking to see if there's a resurgence in defensive sectors, which would indicate skepticism of further upside and more defensive positioning. You're not seeing that today. Consumer staples probably one of the worst in terms of their general look here. So there you go. That's the look at the market carpet. Let's continue on looking at the chart review. I can see some questions coming in. I appreciate it. Keep them coming wherever you're watching the live stream. Pop a question in as we go, and we'll grab a question or two at the end of the live stream. Anything we don't get to, we'll put it in the Chart This mailbag for Friday's episode. So here's where we're at with the chart of the S&P 500. We're pushing to a new intraday high here off of the April low. We're still below all-time highs, which were here in mid-February around 6150. But I think this upswing breaking above, at least briefly above that high from mid-May is certainly an encouraging sign. The bull case for here is this sideways sort of pattern. One of two things is going to happen, right? We're not going to remain in a consolidation forever. We either have a valid breakout above the previous swing high, or we have a valid breakout below the previous swing low. And so that's sort of your framework, at least how I would represent the current market conditions and what would tell me something's different. Today, we're pushing above that level, slightly closing above that high from mid-May, which means tomorrow, it's all about follow-through. Tomorrow, do you get a follow-through day? And for me, I often get questions about what that means. For me, it's pretty loose. It just means signals that there's further optimism beyond that breakout. What I want to avoid is buying a day that breaks out, because how often have we seen one day breaks above resistance, then the immediate next day, it's like a bearish engulfing pattern or shooting star candle, one of those really negative rotational things where you say, yep, that's a false breakout. So I want to avoid that. So I wait for confirmation on day two. Day one's the breakout day. I think that's today. Do you get follow through tomorrow? And if you do, I mean, the market, I think, is heading back towards all-time highs. I think that's the structure. And again, whether or not we think that's what it should do or most likely does based on whatever opinion we have, it's telling you that the market's going higher. And the other comment I would make is when you see the S&P or the NASDAQ make new highs, I'm immediately at this kind of point looking down to momentum, because you always have a potential for a bearish divergence, which would be the market making new highs on weaker momentum. It's too early to say whether that's the case, because this is an active uptrend. You have to wait for the next high to know what that final momentum picture is going to look like. But major tops often have momentum divergences. And so I'm always looking to see if that starts to develop. For now, a day like today is not bearish, and follow through tomorrow would certainly, I think, validate further upside as a likely scenario. Now, one thing that's worth noting, and this is a little thing, but sometimes life is made up of the little things. So the top panel is the equal weighted S&P 500. The bottom panel is the equal weighted NASDAQ 100. So if you look, the equal weighted S&P still below its May peak, the equal weighted NASDAQ actually right at the May peak. So we're just in the last week or two starting to see the growth trade start to reemerge just a little bit, right? I mean, maybe early on with that theme, but certainly something I'm watching to see what happens. Next. All right, let's talk about crude oil. I'm using the USO here, but we could run the same thing on crude oil futures or whatever else you want to use. USO is pretty easily accessible for most people. I'm looking at this chart, and similar to the S&P, it's right at that point where it feels like we might be breaking out. Now, I would not call this a head and shoulders bottom, because that's a weird shaped head with a lower left shoulder and higher right shoulder. That's not how the pattern works. So really isn't playing out like that. I think you could call this a general double bottom pattern, because these lows are kind of around the same place. But in either case, you're really looking for a break above this resistance level, right? This is what we call a supply zone, right? A level where the market has stalled out before. Just happens to be the 38.2% retracement of the way back up to the January peak, which is around 84.50 on the USO. The low here is just below 61. 38.2% of the way is right up around $70. That's pretty much where we closed today. So getting above that resistance level, clearing these swing highs, I think that's where crude oil looks like a pretty constructive chart for the first time in a long time. And if that's the case, I think energy starts to become a decent bet, and it hasn't been in a long time because of that. So I think looking at the USO, looking at crude oil to see if we get that upside follow through, I think pretty important. As I mentioned earlier, precious metals coming down today. Gold and silver were one of the few areas of the market not going higher today through the equity market close. The SLV, though, is still a pretty constructive chart. I would say the same for gold. I don't own silver, and specifically I do own gold, as I mentioned, but I think either one of these is a pretty decent setup right about here. What's interesting about the chart of silver, we're really testing a key resistance level looking at the SLV. We're at the peak from late March. We're at the peak from mid-October. We're kind of right at those all-time highs. And so we're very close to a significant breakout, which suggests further upside. So what's really interesting to me is stocks very close to a meaningful breakout, if not doing so today. And precious metals very close to making a breakout in a significant way. So before you go thinking, all right, gold and silver are safe havens, they're only going to go up if stocks go down. Not necessarily. And I can point out plenty of examples where they move inversely to one another. I can also show plenty of times where they move together. There are a lot of things influencing both of those different price series, but I've learned to focus more on the charts and the trends, and the charts and the trends are pretty good for silver right about here. We'll talk about Alphabet. I just want to highlight this is a pretty ugly candle combination. So I've zoomed in a little bit just to April and May, showing the bounce off of the April 7th low. We can see the 38.2% level retracing back to the 2025 high was pretty good. Actually held there in late April, held there in early May. Really was tested again here in mid-May before finally breaking above. But then all of a sudden we get this big hammer, or excuse me, Lord, I'm violating my own rules that I share with all of you, which is having the proper terminology here. It's a shooting star candle when it happens in an uptrend, and it happened on the first day we closed back above the 200-day moving average. From there, we haven't retested those highs yet, and so it suggests that at least the short-term trend is lower. And now we're kind of past that. And I would argue now in a short-term downtrend. Today, we're testing the 38.2% level, which served as resistance back here in late April, early May. So interesting to see if this would hold. If I was more of a swing trader, I might take a shot at something like this, pulling back to a previous level of resistance, what we call a pivot point. I'm not a swing trader, so that's not the main time frame I'm looking at, but I could see a bounce back to those previous highs as a potential short-term opportunity. Longer term, that holding that 38.2% level is pretty important, because if we don't, all of a sudden that means we're retracing some of this April-May range, and all of a sudden it looks like Alphabet is not participating with the other Magnificent Seven names. A lot of them showing quite a bit of strength here. Here's On Semiconductors, ticker ON. You can see the uptrend phase, higher highs and higher lows off of the early April low. Now, what's been holding these charts back is really failing to get above some of these key swing highs from late March in this case. Kind of call this a head and shoulders bottom. It's not a perfect one, but not bad. And you can see we're actually just breaking above that neckline today. So similar to the S&P, is tomorrow a follow-through day? And if so, pretty encouraging. Same idea from Microchip, kind of a different structure, but breaking above trendline resistance, closing back above the 200-day today for the first time since July of 2024. Again, with the breakout today, do you get follow through tomorrow, signifying it wasn't a fluke? Constellation Energy was in the news. Meta making a big investment in Constellation for nuclear energy. You can see that was not a great pattern, though. Nice gap higher, and the stock gapped open above 340, which basically takes us back to the all-time high in January of 2025. But from there, it was a decline. We actually closed near the lows of the day. So early on, it looked like CEG was going to blow out to a new high, pop above 350, and who knows where beyond that. By the close, it was sort of a whimper of a day. Investors selling off on that gap higher, and basically closed right where we were yesterday's close. The market basically unwinding all of that initial optimism after the Meta news headline hit before the open today. Goldman Sachs is an interesting chart. This is the last chart we'll look at, and then I'll take a couple questions here. GS, the financial sector has been sort of hit or miss here. There's been some charts that have really started to improve, and I think generally the chart of Goldman Sachs is innocent until proven guilty. It really is consolidating, very similar to like the NASDAQ chart in a sideways consolidation phase. Now, what's interesting here, and what I wanted to highlight, is that last gap higher in early May. This is when the European tariffs were the announcement was made, and basically delaying the tariffs there. Gapping above the 61.8% retracement. We then pulled back and tested that level just below 580 about a week and a half ago, and from there we're still sort of in this range. So I think The chart of GS at this point is bullish with a break above 615, 620, which would clear that range. That's what like Meta has done. That's what Nvidia did today. That's what charts like GS have not done yet. So I think with some of those stocks in the financial sector, sort of giving a similar sideways vibe here, stalled out uptrend. The uptrend resumes if we recover from that power on stall, as I shared on the show last week. And some charts doing that, some charts not quite doing it. We'll see. And again, I think obviously the bull case from this point on, I think involves charts like GS resolving to the upside. These stocks resolve to the downside. All of a sudden, this market looks very vulnerable very, very quickly. And I think that's what is probably unsettling to many investors. Maybe some of you guys watching and listening today is it always feels like we're one headline away from the market looking very distributive very, very quickly. All right, let's take a couple questions here. 3P Investor, thanks for watching as always. You asked, can a chart foretell its earnings in advance? For example, Broadcom. There's so much, and that could be the source of a multi-hour debate, podcast debate. Maybe I'll set up one of these days where we debate the nuances of that question. So many different things to unwind with that. I mean, can charts predict earnings? I mean, no, I don't think. Earnings are kind of their own thing. But I would say, can charts tell you a great deal about the sentiment going into earnings? 100% yes, right? And you'd mentioned Broadcom in particular. I don't think this is a Broadcom specific thing because earnings are coming up this week. And I know that's why you're asking about this particular stock. I mean, the trend in Broadcom has been remarkably strong and arguably one of the stronger charts you'll see in terms of a reversal from the April low to where we're at today. I mean, so many stocks are still below their peaks from earlier this year. Broadcom pushing above there today. So I would say the optimism going into earnings is very real. Certainly, this has been fueled by other names in the space like Nvidia having very strong earnings last week. So certainly giving a lot of optimism. So I'd say the market's pricing in pretty good news next week. And if not, if investors were not optimistic about earnings, there would not be this much buying. There would not be this much demand for shares. So I think it tells you two things. Number one, it tells you that investors are pretty optimistic. We'll see what happens between now and the report. But I think that's key. It would also tell me that if there is a negative earnings release, these names that have often been bid higher going into earnings, those are the ones that collapse very, very quickly because all this optimism is unfounded. And we rotate lower. So that's one thing to keep in mind. The other thing I would say, and this is not something I focus on a ton, but some in my network, many of which I've interviewed, like Tom Boley, like Danielle Shea of Simpler Trading, others that'll come to mind, do a really good job of analyzing price behavior around earnings releases. So Danielle in particular does a really good job of talking about, what the options market tells us about expected moves excuse me, going into earnings season, how much the stock could move if the earnings are positive or negative, looking at historical earnings releases and average surprise, average move. It's just not something I focus on a ton in my own work, but I know others do. And so your question was, can charts help predict, what's going to happen with earnings? I mean, predict is not the word I would use. Can it tell you what has often happened and give you a more informed way of understanding how the market's most likely to react to earnings? 100% yes, I would agree with that. I get away from, can technical analysis predict the future? I would never describe technical analysis as doing that. But does it give you a better sense of the probabilities? 100% yes. All right, maybe one more question. Patrick, thanks for watching on YouTube. Do you think the gold to silver ratio is indicating that silver is largely undervalued? So that is actually a really thoughtful question. I want to say I have that kind of chart readily available. I don't know if I do. If I did, I would probably have it here. And I don't think, no, I've got copper to gold. So let's look at silver to gold. So let's do let's do just like SLV to GLD. It's not perfect, but not bad. So what you were implying, so this is the silver to gold ratio using ETFs. So, if this line is going down, gold is outperforming silver or silver is underperforming gold. the line's going up, silver's starting to outperform gold. And I think what you're highlighting is, if you look at the relationship between silver and gold, silver has been undervalued relative to gold here recently, and I think 100%. Is that a fair comment? For sure. I think you can do the same thing with like gold stocks and physical gold, right? Gold is something that's very widely followed, and certainly it's been well documented, the relationship between gold, certainly the low correlation between gold and equities, which I think is probably its most attractive characteristic. But what does it mean if silver is a better opportunity? It means you probably want to own silver. I'm thinking of Miss Schneider, because someone mentioned, I don't know which of Dave's guests talked about it. I'm pretty sure you're thinking of Miss Schneider, because I remember she often like slaps me on the wrist verbally when I ask about gold, and says you should be looking at silver. And I'm sure she's talking about this because she tends to follow this ratio more closely. But yeah, is that mean that silver could be a little more of a catch-up trade? Absolutely. And some investors that I've worked with in my career have made their own careers off of looking at relationships here and looking for when the relationship becomes extreme to the upside or to the downside, and just betting on mean reversion in that ratio. They might look at this and go long SLV and short GLD as a way of just playing the trade, not making a directional bet on either, but just betting on this relationship to come back to a more normal ratio. It's another way to think about it. It's what you call a market neutral strategy, which is betting on a relationship and how it's normally been, and the fact that it's currently at an extreme relative to that kind of normal level. Something to think about. But I would say silver, between the two, silver is an incredibly strong chart. It's been lagging. So if there's a bit of a kind of a catch-up trade, silver maybe with some further upside. Great question. I appreciate you making me think with that one. I might go back and check that latest interview with Ms. Schneider, and I need to get her back on the podcast for sure. But in the meantime, I will say thank you so much for watching. Thanks to those of you guys watching live, asking some great questions. Always appreciated. If you're watching the replay on our YouTube channel, put a question in the comment section. I would love to hear your questions and hope to answer it in our next mailbag episode on Friday. Have a great evening. I'm Dave Keller with Market Misbehavior, reminding you it's always a good time to own good charts. Have a good night, folks.